Friday and early this morning. The main factors which accounted for the decline, the potential, or at least potential shift with respect to the odds of the Fed moving next week, the quantitative funds related selling related to the move up in volatility, which affects what's called risk parity funds. They tend to adjust positions both in the bonds and stocks when there's a uptick in volatility, given that they already have high leverage. And what appears to be a shift in global monetary policy with respect to central banks, indicating that they're not going to be as aggressive with respect to accommodative policy, things like quantitative easing and increasing asset purchases. That shift has been meaningful, beginning really back with the Bank of Japan more than 6 weeks ago, and most recently with the European Central Bank on Thursday with Mario Draghi's comments. That, I think, is causing a shift in investor psychology with respect to bond yields, and that in turn is translating to weakness in equities. I expect this type of volatility to continue and actually increase because historically September and October tend to be 20 to 30% more volatile than the months leading into that time frame. So I continue this to be just sort of an initial phase in a longer-term shift in volatility in markets.
Gurraj, talking of volatility, in fact, you've done some serious work on volatility. The way the global, or I would say CBOE VIX had calmed down in a very narrow range last couple of weeks, was it already giving you an indication of a sharp up move or a down move? And is that correct to correlate the movement of the CBOE VIX as an indicator of what lies ahead, particularly the benchmark indices there in US?
It's actually a pretty good indicator with respect to a real-time snapshot of where volatility is. The interesting thing, which I picked up on and tried to focus on some of my public commentary, was that the range in particular, for example, the Dow Jones Industrial Average, the 40-day range had been the smallest in over 100 years, which is incredible if you think about it. And also the 42-day range in the S&P 500 index of about 1.77% was the longest stretch of that tight of a range since at least 1928. Those two factors in and of themselves are quite remarkable, indicating a incredible duration of complacency with respect to movement in the markets. That, when you combine with some of the analogs that I had examined, with, for example, the way the Bank of Japan yields moved in 2003 versus where they're currently positioned, seem to indicate that with any type of catalyst, there would be a meaningful and sustained pickup in volatility. Those catalysts are starting to come into place, and the analogs are still in place. So I expect this type of volatility to continue, and it's going to impact emerging markets in a meaningful way because there has been a tremendous inflow into the emerging market debt over the past several months to essentially capture yield, which was positive, which in many parts of the world yields are actually negative. As you know, over 14 trillion in debt is facing negative yields. So that capital inflow is I believe, starting to shift and reverse for at least the next 3 months.
Right. Gurraj, stay with us. We'll talk a little more about that, but also get in our other panelists on the show and get their particular view. Dhananjay, you've also done some research recently. How you observed what's happening right now globally and the way we are reacting to that, the assessment of the recent bout of risk-off in the market. Do you think there will be volatility and we will also fall in line with the rest of the world?
Yeah, from a global standpoint, I think there are increasing evidence that the yields on treasury bonds are actually bottoming out, and I think post the Brexit there was a significant rally in the bond market, and there was a sort of interpretation that there will be further additional QEs that will happen. So that actually resulted in a significant decline in the treasury yields across US, Europe, and many other economies. And while that was happening on that front, the other aspect that was happening was that the equity markets also remained fairly buoyant, and basically the bond market and the equity markets were actually throwing contradictory signals. wherein the all-time high levels that we saw in, let's say, the U.S. Equity markets reflected a very buoyant outlook in terms of growth, whereas a sort of a decline in U.S. Treasury yields, 10-year falling to something like 120, 130 range, I think reflected sort of a very weak outlook. So there was a sort of a contradictory signals that were happening. I think the common factor was that there was a sort of a liquidity play that was happening across bonds and equities and had a ramification on other markets as well. I think more recently the data point that have come around from the US reflects a sort of a strengthening labor market, and there is a sort of an increase in the payments that labor gets. So I think there is a certain amount of tightness in labor market that's happening. There are indications that US core inflation would be inching towards 2%. So while that was happening on one front, on the one side, you saw ECB last week not extending the quantitative easing purchase program, and also there is an increasing sense in Japan that the ability of BOJ to purchase more government bonds is actually coming to an end. So I think all these factors have translated into a sense that there is a bottoming out of the treasury yields, and in that context, with the fact that equity markets are also riding high on liquidity, there is a sort of a convergence that is happening, wherein correction is happening on both equities and bond markets simultaneously.
Rajesh, how are you looking at the India impact of this global sell-off? How much should we be concerned about what's happening right now?
I think the markets have moved up kind of a one way from I think beginning of second week of March, and from there it never gave any opportunity to any investor to invest because it kept moving on. And in fact, if you see, the valuations of many companies have also started becoming a little bit what I would say at kind of upper band kind of thing. That doesn't mean there is no upside from there, because I think from India perspective the earnings story has just started. But yes, it makes kind of investors wait and watch kind of a mode. So this correction which has started in the last couple of days, I think it is a welcome move. And being in PMS, in portfolio management services, we have an opportunity to invest kind of a staggered investment approach rather than investing entire money at one go. So I think we are very happy about this move, and if market corrects by another 5 to 10%, then we'll be using that correction as a buying opportunity.
Dhananjay, you're talking about the latest macro note of yours. Do you think that this liquidity which we have seen sloshing around globally ahead of the US rate rise possibility in September or in December, this liquidity will hold itself back, which we have been a big beneficiary of last couple of weeks?
Yeah, I think if you look at, if you go by the guidance of Fed, in the last meeting, there are two hikes that are pending, one possibly one that can happen in September and then subsequently in December. So there are two hikes that are possible, and I think the Fed would want to move beyond some of these global factors that it has actually been captured with, because of which it has not been able to go ahead with the normalization process. The risk is that till a week back, nearly $14.5 trillion worth of bond instruments were trading in negative territory in terms of yields. That has declined to something like $8.5 trillion. So there is a sharp decline there. That has a repercussion as far as the valuation loss that can happen because of that in the bond market, and that should also have a ramification of emerging market flows, because remember when there was a sort of a very positive view on liquidity earlier, considerable amount of flows had happened into emerging markets as well. So I think till the time there is greater clarity about how the Fed would want to move on to the normalization process, I think there will be certain amount of risk to emerging market flows as well, and that should result in hardening in government bond yields even in the emerging markets, and there should be some correction in equity markets in the emerging market area as well.
Rajesh, you were talking about how one should not be panicking in this kind of fall. In fact, one should be staggering the purchase going into say 8 to 10% lower because you see earnings going forward to improve. What exactly are you talking about or recommending or looking at very closely during this correction in order to buy?
We are very bullish on the consumption as a theme. When I say consumption, we are bullish on passenger car companies, we are bullish on consumer finance companies, we are bullish on lifestyle financing companies, we are bullish on home style financing companies, home improvement or housing finance companies, we are bullish on consumption food companies, and we are equally bullish on kind of a company, cement kind of a companies, because they are also going to benefit both because of the consumption, housing boom, and at the same time because of the infrastructure thrust given by this government. So I think number of sectors are going to definitely improve. We have also started investing in last 3-4 months, as I was discussing some time back, I think in the early April, that we have started investing in even PSU banks. Because we believe that the corporate balance sheet ultimately needs to improve, and I think there are going to be steps which government is also taking to make sure that public sector bank balance sheet also improves significantly from here on. So I think the asset quality, the worst of it probably may get over by second quarter or third quarter. But market is generally ahead of times. Therefore, it is, you cannot wait for last drop kind of thing. You have to start investing a little bit early, and then basically as the NPA cycle finally recovers by fourth quarter, you will get the real benefit. So, that's a new name which we have added in last 3-4 months in our portfolio. We have also looked at the corporate capex beneficiaries, for example, companies like Timken, which we own from long time. We also invested into construction companies because they are beneficiary of NHAI road orders. At the same time, the new government initiative of resolving the issues between construction companies and arbitration award, that will definitely lead to improvement in cash flow for many players, including banking and finance, at the same time including the construction companies. So these are the few sectors and themes which we are getting positive on.
All right, Rajesh, we'll let you go on that one. In fact, all of you, Dhananjay, Rajesh, Gurraj, gentlemen, thank you so much joining us on this special edition of the global sell-off, which we are tracking here on ET Now. Thanks very much for watching.
In association with National Stock Exchange.
The all-new Skoda experience with new crystalline designs, India's first 4-year service care, and all-new showrooms. It's better, made better. Skoda, simply clever.
ओरिएंटल इंश्योरेंस के 70वीं स्थापना दिवस पर मैं सुजय बैनर्जी सभी सम्मानित ग्राहकों, कर्मचारियों एवं सहयोगियों को हार्दिक शुभकामनाएं देता हूं। ओरिएंटल परिवार देश की सेवा में सदैव समर्पित रहेगा।
Get ready for the madness. Ab India karega trading and unlimited trading for ₹6666. F6 online.
India Bulls Housing Finance, with a market capitalization of over ₹35,000 crores and PAT of ₹2,345 crores for FY16, offers a public issue of secured and unsecured redeemable NCDs. The issue opens 15 September, closes 23rd September 2016. For risk factors and more details, refer to the prospectus available in the websites of the SEBI, stock exchanges, the company and the lead managers.
Nature wants everyone to have their own shelter, whether it's a stylish designer home or a home with a spectacular view, or a conversation-filled duplex, while some just dream of a cozy corner. At PNB Housing, we make your dream real with easy online access, doorstep delivery, and an amazingly friendly service. The door to your dream home opens easier with us. Home loans from PNB Housing Finance.
गरम राजमा, गरम चावल, रोटी के साथ गरम दाल, गरम पोंगल, गरम हलवा, ये है ऑटोमेटिक कीप वार्म का कमाल। प्रेस्टीज इंडक्शन V3 सीरीज, टाइम सेट तो खाना रेडी, रहे गरम ऑटोमेटिकली।
100 stock calls a day.
Bellwether IT stock is setting new highs to market expectations.
One breaking story every hour.
Big story breaking.
A fundamental view every 30 minutes.
I'm bullish. I'm very bullish on this.
A technical view every 15 minutes.
No sign of weakness. 8,000.
Market internals every 5 minutes.
We have seen an overall 600 points.
Stock spotting every minute. Thinking markets every second. ET Now.
आदत से लाचार, दीवार पे
इसलिए Berger Easy Clean Paint with cross-linking polymers. दीवार पे न दाग न धब्बा.
The Professional Golf Tour of India has been the nursing ground for India's leading professional golfers over the last decade. The PGTI now brings the country's top